Alphabet is Christine's first idea.
Yeah, so large cap tech, we talked about them earlier, Andy. I mean, Google Alphabet has come off, I think, over 30% from its highs. Multiple is now quite reasonable, I think, at, below, close to a market multiple. Yes, I think online search or online advertising essentially is what they generate their revenues from. And yes, if we see a slowdown, we saw some of the slowdown in the results the past quarter because they grew quite rapidly during the pandemic. And so it will hit them because they're so large and prevalent now. But we do think this company, they still are the leader in online advertising, and given their dominance in search. We talked about some of their other products like Google Maps and et cetera, and Waze, that, they're still going to garner a large portion of that ad budget when companies have to spend. And I think if they find other channels, such as Meta, I guess, not as effective, they may actually allocate more to Alphabet. So it's actually benefiting them. So I think given the contraction we see in the multiple and the pullback, this is a great opportunity to add to buy this name for long-term appreciation.
Okay. Your next idea, Aritzia, superstar retailer.
Yeah, Canadian retailer, and it truly is a growth stock, I think. We've owned Aritzia for about a year and a half now, maybe.
I didn't know, sorry, Christian, I didn't know it had come down so much from its highs.
The company pulled back. They reported last week, Andy, and it was a very strong quarter on the top line. Revenues grew over 38%. But I mean, the retailers are having a tough time, including Aritzia this past year, because we know that there was supply chain issues. So the company did a lot of expedited freight last year to get their goods into their stores because they were experiencing such huge demand. And now that was a headwind to margins. Now this past quarter, when they reported last week, they said, and this is actually a plus for the economy as a whole, those supply chain issues are getting resolved, and their goods actually came in sooner than they anticipated because shipping time was shortened versus being lengthened. So now their inventory, they have more inventory in stock than they anticipated because things were just coming in faster than they thought. But having said that, I mean, they're not going to discount the inventory. They've been very successful at selling full price. But, in an environment like this, the market kind of focuses on the growing inventory. Are they going to start discounting? That's not what Aritzia management is saying. They feel that, they're not going to have, usually, retailers put their goods on sale seasonally, past holiday. It's going to be at the same levels at pre-pandemic levels. And so meanwhile, they're having to incur additional warehousing costs to accommodate this extra inventory. But having said that, they're experiencing great growth in U.S. They're only about half their sales is now from the U.S. They have about 114 stores. About 46 of those stores are in the U.S. They feel they can more than double it to 100 stores. And the growth in e-commerce is also very strong. It's over a third of their revenue. So truly, this company has a lot of growth runway in the U.S. in particular. They're quite well known within Canada. But I think why their sales have been so robust, because they kept being asked that, are you seeing a slowdown in your consumer? And they're saying no, people are spending. And I think it's really new customers that are trying their product in the U.S. So it's incremental new customers. And so that's driving their spend top line.
What's the buzz over them culturally?
They have everyday luxury. They have a lot of in-house brands that just kind of, I guess, hit the mark. And 95% is in-house brands. It's their own designers that they utilize. And so they just kind of know how to put out the product.
And Visa, obviously a toll collector on world commerce.
Yeah, it's not even e-commerce, on spend, which is why we like Visa. I mean, is that change from to digital payments from cash and check. So obviously the growth of e-commerce is conducive to digital payment. But as well for Visa, they've seen the rebound in domestic travel when the North American and even European economies opened up. They've seen the rebound in leisure travel. And now, I mean, on their last quarter, they said the last, lever, I guess, to all this is the reopening of China, because internationally, Chinese travel was still very weak because they were primarily shut down for most of last year. So now they're starting to open. So that's going to be another avenue of increased payment, because when you travel, you tend to use your credit card more and you tend to spend more. And we talked about business travel. That has really, has started to improve, but perhaps that's still to come. But longer run, the reason why we like Visa, yes, they're going to have these areas of like very strong growth, but longer term, that trend of increasing digital payments. There's still many areas in the world, Andy, where cash and checks is still the main form of payment. So that's still, that adoption curve is still have a lot of runway. And Visa, being the largest payments processing player, is going to garner a lot of that traffic.